Good afternoon, ladies and gentlemen. My name is Ryan Suter. I'm one of the senior investment managers here at Sharewise. We're here with Simon Linge from Lithium Australia. Now, Simon's the managing director and CEO of Lithium Australia, and he's been kind enough to dedicate his time to answer some questions this afternoon. Simon, is there anything you'd like to start us off with?
Look, great to be with you and the viewers. Looking forward to the questions that may come through, but also pleased to be here today, given the announcement we made to the ASX this morning around our recycling business, EnviroStream, being operating cash, achieving its maiden operating cash profit.
Very exciting stuff coming out of Lithium Australia. Now, I've got a couple of questions that I'm going to lead us off with, and then if participants would like to submit any questions through the Q&A function on Zoom, feel free to do so, and I will ask them to Simon after I get through my questions. So, Simon, let's just get stuck in. What led to the improvement in Lithium Australia's recycling operations to achieve maiden operating cash profits?
Thanks, Ryan. A lot of things, really, but simply put, we've sat back and carefully thought through our strategy and what commercial model we should be operating to. And we've made some significant changes in the way we go to market. Principally, things to note, we're focused now really around lithium-ion batteries. Previously, we had a broader collection of different battery chemistries, but really focusing in on lithium-ion batteries, and then on larger format lithium-ion batteries. And then importantly, we've then shifted our model from being reliant on really the downstream, purely on downstream or the value streams that we create by recycling, to actually moving to a upfront fee for service. And that's brought in higher revenues, which are shown through what we've been doing, but also brought forward those cash flows earlier into our business. And really pleased with the way the market has accepted that shift over the last 6 to 9 months.
Okay, so on the topic of that shift for fee for service as a recycling model, realistically, how has this been received by new customers, but more importantly, existing customers?
Yeah, look, any customer that you change the commercial model and particularly increase prices, which is effectively what we've done, it's never an easy conversation. But as we've explained our model to customers and where we stand in the market and the value proposition we put forward to them, customers have been accepting of what we've been put forward. And just to give you an example, we've invested last year a significant amount of money to build up our safety and environmental systems in our recycling operations so that we can have a conversation with the blue chip clients that we are now under exclusive contracts with for multiple years. And that's given them the confidence to give us those contracts and shift the commercial model. Okay. The other thing that we've done with the clients is, as we've explained to them, the shift in the commercial model, it's been a reliance on just commodity prices from the value streams that we rely on isn't sustainable for recyclers, particularly when you look at commodity prices today. And as such, let's deal with an upfront service fee, but we can also share the risk and the benefit in the commodity prices together. And they've liked that model because it also gives them the option of retaining and owning the value streams, the black mass or the mixed metal dust that we produce, so they can start to think about circularity within their businesses.
Okay, well, we'll appreciate that clarification there. Now, realistically though, what is driving Lithium Australia's focus on large format lithium-ion batteries relative to other battery types?
Yeah. Again, very simple. We're dealing with blue chip clients who are prepared to pay for a service. Yeah. They've got ESG credentials they want to meet. They've got circularity on their mind in terms of owning the battery from the start, taking the materials out of the battery and then putting them back into a battery. And they see it as part of their ESG obligations. So we see the larger format batteries, which is greater than 5 kilos. So energy storage batteries, EV batteries, but also household appliances out of vacuum cleaners, power tools. They're all B2B clients. Yeah. It's a less complex world, a less costly world in terms of collection and logistics, but they're clients who are willing to pay for a service and appreciate a quality service that we're providing.
Okay, well, that's really good to know. Now, on that topic, has Lithium Australia noticed a growing demand for these, large format lithium ion battery manufacturers, especially for the recycling services?
Yes, we have, Ryan. It's I guess when we sat back and looked at where just over a year ago, we really sat back and assessed what we wanted to play in the market and how we wanted to play, and that's transitioned into what you're seeing today. Large format batteries are the growing type of batteries in Australia. Right now, you're probably seeing 100,000 tonnes of batteries being sold in Australia in what we would call large format. Within the next 2 years, we expect that to be 200,000 tonnes. Within a decade, that's sort of circa 800,000 tonnes to 1 million tonnes is sort of the range that's forecast by others, not us.
Okay.
So with that market of batteries growing, that is the significant portion of the batteries that are sold in Australia, and will be the dominant volumes. And therefore, we think we're really at the nascent start of the growth. And so to have an operating cash profit at this point really bodes well for the future of the Australian business, given that volume growth that's going to come in those large format batteries.
Obviously seeing future growth is something really exciting, and obviously having your maiden cash flow as well is very exciting. But does Lithium Australia expect to be able to sustain this ongoing cash profit within the recycling operations moving forward, or is it realistically going to be a bit of a one-off? Like, moving forward, is this cash profit going to be not only maintainable but also grow?
Absolutely. That's our focus, is growing not only where we are today. That's the start from our perspective. We are focused on creating sustainable operating cash profits for this business and growing off the base that we've created. Is it sustainable? Yes. That's why we're entering into these long-term contracts with these blue chip clients like LG Energy Solutions, Hyundai, Volvo. We've got many more in the pipeline. We're already working with people like Tesla, but we're looking to renew those contracts with them to extend our terms with someone like them. So this whole focus on signing to those long-term contracts is to secure the feedstock that comes into our recycling operations.
Okay.
Allows us to have those fees and continues to see those volumes grow over the years ahead.
Okay. Now, you have mentioned that you're entering into these long-term strategies, as well as you're currently in negotiations with some large partners. Is that the only aspect of Lithium Australia's future growth strategy, or are there other aspects which we can explore today?
Yeah, no, we're pretty open about where we want to take the business. I think the other aspect there's probably two other aspects that we're focused on. One is also securing an offtake for the materials that we produce through our recycling operations, particularly our mixed metal dust, as we describe it, or black mass as the industry describes it. So we've recently signed a binding offtake agreement with Sunhill High-Tech out of Korea, who are one of the global leaders in recycling. We have a very strategic relationship with them. We're looking to continue to grow that, but that gives us surety not only of the feedstock at the front end coming in and then our ability to process it, but also our ability to then sell our downstream materials.
Okay.
So that's an important part of our growth strategy. And with Sunhill, we're also talking with them right now about a joint development agreement where they'll look to invest into the recycling business to help us with our growth strategy, which I'll step into now. So our growth strategy is really, we're growing really rapidly. When we started out at one site in Victoria, we're now spread across 2 sites in Victoria. In the next couple of years, we'll look to consolidate those operations into what we call a super site, which will have ongoing room for expansion, but also to expand our footprint into other states, particularly Queensland, WA, and New South Wales. So that's really what's in front of us in terms of our growth plans. And we're advancing our thinking on certainly Queensland and WA as to when and how we step into those markets with some facilities.
Okay. Now, just shifting here to focus on the joint development agreement you guys have with MinRes. Can you please speak to the progress that has been made so far and what Lithium Australia is expecting to achieve within the rest of the calendar year regarding this joint development agreement?
Yeah, so maybe just a little bit of context. So this relates to our lithium chemical technology called Linge. It works on hard rock spodumene and improves yield on low grade or waste materials at spodumene facilities. August last year, we signed a joint development agreement with Mineral Resources where they will fund a piloting program and an engineering study, which we've been undertaking this calendar year. At the end of this calendar year, would be subject to the results out of the piloting program and the engineering study. We'll look to form a joint venture around the technology with Mineral Resources 50/50. In terms of progress, we've announced to the market that we've been through piloting phases. We've the front end part of our piloting program, and that's been really positive from our perspective. You learn things along the way, but overall, a really positive set of outcomes. We've moved into the second phase, so what we call the back end phase of that process in terms of piloting. And again, we've been pleased with what we're starting to see there. It'll be a few more weeks / months for us to get full results out of that. In between times, the engineering study that we were undertaking to build to work through what it would take to build a demonstration facility. That's progressing well, and we'd expect all of that to come together by the end of the calendar year and allow us to decide next steps with Mineral Resources.
I'm sure current shareholders are going to really appreciate those clarifications. That wraps up all the questions I have just to start us off. I'm going to move now to a couple of participants submitted questions. Now, again, ladies and gentlemen, if you have any questions and you'd like me to ask to Simon, please submit them to the Q&A function in Zoom. Now, the first one here realistically is, obviously going to be a bit of an elephant in the room. What are the turnaround plans to address the company's performance in the short term and obviously the share price decline? Now, we will note that the share price performed particularly well today, but obviously, let's focus on a more long-term, long-term perspective.
Yeah, look, we've seen and are disappointed with where the share price has traded in recent weeks. A lot of that's been associated when we've spoken to people has been a bit of tax selling, but yeah, we're pleased with where it's the response of the market today. Our view is pretty simple. We've got a very clear strategy as to how to commercialize and scale up our technologies. We can see already and so just stepping through and actioning our strategy, we believe will translate into share price appreciation. And I think, if we step back and you've touched on, the arrangement we have with Mineral Resources around one of our technologies in lithium chemicals and being fully funded or funded through our process for that. We're now seeing the recycling business with the shift in strategy and the commercial model hit its maiden operating cash profit, and we expect that will continue. And we're looking at our battery materials. We're very active in looking for a joint development partner in battery materials, and feel that we're well advanced in bringing that technology to its next phase of commercialization, which would be a demonstration facility, and in active discussions with joint development partners for that. So I think as we continue to hit what we say, do what we say we will do, then that should reflect in the market recognising that Lithium Australia does what it says, and that we're moving towards commercial pathways for all of our technologies, and we believe that will reflect in the share price.
We thoroughly appreciate that strategic update. Now, one of the participants is particularly interested in the impact of Australian and US trading relationships with China and how differences in future trading relations will likely play into demand of Australian-sourced lithium. Realistically, how do you reckon these interactions are going to impact it from not only mining operations, but also from recycling?
Yeah, look, it's an interesting interplay between the two countries. It can only be described as strategic competition. I think for lithium miners, China will continue to be a very important market. I think the US will also be an important market over time, but the WA miners be able to support. I think in terms of the lithium value chain, though, we're very focused on the opportunity to be IRA compliant with particularly our battery materials product, but also our recycling products over time. So we believe that what's happening in the US is a real positive for Lithium Australia in terms of our technologies and where we can play. And in terms of specifically around recycling, I think what we're seeing in the US is an increasing focus on recycling. I think everybody around the world recognises that there will be a deficiency in critical minerals in terms of virgin mined materials, and that recycling plays an important part. So we're already starting to see that in our conversations with our blue chip customers, that they are really keen to maintain circularity of their products. We're also going to see, I think, an increasing level of regulation in the United States, and they'll probably end up following a European model. I think Australia will do the same, which will, elevate the amount of batteries that are going to get recycled. So we talked before about where does the feedstock come from? Well, I think we're going to see regulation that requires battery producers to make sure that their batteries are recycled. Look, that China-US relationship is going to be a one to watch. But I think overall, the reality is that both countries and all countries need to electrify. Batteries play a part in that, and we'll be able to play our part in those value chains, particularly in the Western allied value chains.
Okay, well, thank you for your opinion on that one. Now, just focusing on policies and regulations as previously mentioned, how are Australian government policies and regulations shaping the future of the lithium industry? And particularly in your case, are there any new initiatives or incentives aimed at supporting this sector as well as battery recycling?
Look, there's a lot happening. I touched on the IRA in the US, and I think that's created, again, a competitive environment for critical minerals and the lithium-ion battery value chain. So we've seen regulations and support in Europe, and that's now being matched in Australia with the government's recent announcement around Future Made in Australia, battery breakthrough initiative. So there's lots of and additional funding into critical minerals. We see all of those as great opportunities for us to leverage that support in Australia to be able to build that value chain and participate. Just as simple examples, the battery breakthrough initiative, certainly would be a great place to support VSPC battery materials business, and certainly we're in active discussions with governments, state and federal, around support for that technology. In terms of recycling, we're seeing a number of states offer incentives for the establishment of battery recycling. I think recent focus on lithium battery fires is encouraging the states who have responsibility for waste to really incentivise recycling to be put in place. And right now there is work being undertaken by the Queensland government on behalf of all governments to look at battery end-of-life batteries and what should happen there. And I think we'll see some significant recommendations coming out of that work by the end of the year. And I think we'll end up with a consistency of regulations that are favourable to recyclers, such as a ban on batteries going to landfill. And at the moment, we've only got 4 states or territories that have that ban. I think we'll quickly see that ban extended to all of the states and territories, work on harmonisation of legislation to make it easier to recycle. So all of that, I think, is in the wind. And why do I think that? Well, we're part of the advisory group. We've had that privilege of being invited into that. And I think, certainly there's a sense across the group that there's some of the things that need to be put in place. So we're very positive that the regulation will be give us some tailwinds for the recycling business and continue to see the volumes of recycled batteries actually increase.
Really appreciate your insights onto this matter. Now, just shifting again, with the negative sentiment that is present in the lithium industry in some places, does this potentially lead to a change in company strategy, or are you and is Lithium Australia unfazed?
Look, we're fundamentally unfazed. Just from our perspective, we're not actually, we're exposed to the lithium battery value chain.
Yeah.
We're not a lithium miner. So we are relatively insulated to commodity prices rising and falling. Even with our lithium chemical technology and seeing that move forward, yes, that will be associated with lithium prices, but it's associated with waste and waste materials effectively that have zero value to the miners today. So it's pretty much a free kick.
Yeah.
In terms of our battery materials business, we're really an input is lithium, an output is a lithium product. So it's really a spread business. So whether it goes up or down really doesn't phase us. And in terms of our recycling business, the shift that we've made into our fee for service model really means that our revenues are around service and less exposed to commodity prices. So for us, we see ourselves as a pretty unique opportunity to invest into the lithium value chain without necessarily the vagaries of being exposed directly to the commodity prices going up and down.
Of course, the ability to get some indirect exposure is always going to be attractive for investors. Now, does Lithium Australia see the battery collections mix continue to shift towards large format lithium ion batteries, or will the collection of other non-lithium ion battery types be phased out?
Look, our focus is definitely on lithium ion batteries and what we would describe as large format. As I described earlier, that's energy storage, EVs, but also household equipment, less so on the batteries that might go in your remote control. Look, again, when you look forward at the volumes that are coming into Australia and the predicted volumes, it's all large format. The small format batteries, whether they're alkaline, whether they're lithium ion, whether they're lithium button cells, there's about 100,000 tonnes of that sold today across Australia year on year, and that's the forecast is for that to remain pretty flat year on year. So, yeah, our focus absolutely will be on that larger format battery and lithium ion batteries, regardless of chemistries. We think that's the real growth opportunity. And again, where we are today with the recycling business really bodes well for its future, given that volume growth.
Of course. Now, just pivoting for the last couple of questions.
Sure.
With the emergence of sodium-ion batteries, is this a concern for lithium's future as a dominant battery material?
Look, sodium ion's early stage. Certainly, we're seeing a couple of the Chinese big battery players starting to what we would describe and they would describe as sort of play around with that. The value chain around sodium ion batteries has still got a long way to go, and it's fundamentally not really sound at this point in time. But as a battery chemistry, it's one we watch. Our battery materials division, VSPC, is focused on LFP and LMFP today, but that doesn't mean we don't have an R&D program, and we have already started to look at sodium ion and whether our technology can work with sodium ion. And the good news is that we think that is absolutely on our radar, that we can do that if that chemistry starts to really emerge. But regardless, I think our view is pretty simple. The world's need to electrify, and batteries playing a part in that, will mean there will be plenty of battery chemistries, cathode chemistries, all with different applications. And the need is so large that there's every application, every chemistry will have its opportunity. And we believe our LFP and LMFP is that one of those first opportunities right now.
Okay, well, thank you for that very detailed answer. Now, just moving on to the last one I think we have today. The announcement mentioned a revenue share scheme on downstream mixed metal dust revenue. Could you elaborate on this and how it reduces the company's exposure to mixed metal dust pricing risk?
Yeah, so our model, if I just take a step back, all right, our model sort of 12 months ago plus was really to be fully focused just on the mixed metal dust price, and that was our primary revenue source a dominant revenue source for us. As commodity prices have come off, then that's obviously lessened in terms of absolute numbers. So shift to a fee for service model allows us to now capture earnings up front, and that we've got a strong margin in terms of our ability to recycle batteries. In terms of MMD sales, what part of that commercial discussion with our clients has been, look, we recognise that commodity prices are low today, so we don't want to be in a situation where we charge you a fee up front, and then when commodity prices start to rise at some point in into the future, that you start to go, well, you're double dipping. So what we've done with our clients is to say, look, once the commodity prices go above a certain floor, we'll start to share that benefit with you 50-50.
Okay.
And they really like that model. Yep, I know I'm paying for a service. I'm getting a quality service up front. I know that my batteries are going to be destroyed. I have the potential to buy that mixed metal dust myself.
Yep.
But as prices go up, hey, I might well be getting a benefit back, at least 50-50. And that's been part of the success, I think, in switching our clients across to this new commercial model.
Okay, well, that does appear to be very advantageous. Well, Simon, that about wraps everything up today. We really appreciate the opportunity to speak with you. I think we've got just one more here.
Sure.
Has there been interest from international recycling customers? Has Lithium Australia considered international expansion?
We certainly have. We've had a number of inbound inquiries about potentially stepping outside of Australia. My view is that we will do that. That'll probably be, if in effect, a third phase of growth for us. And we need to do that with partners, because it's very important when you move into a market that you can secure that feedstock of battery supply.
Of course.
But our focus right now is, continuing to grow the profitability of the EnviroStream business, as I said earlier. Do that in Australia, bulk out in Australia to make sure we maintain our leading position in Australia, and then start to consider those overseas opportunities. I think extending ourselves right now would mean that we probably run ourselves a bit thin and probably drop the ball. And I'd rather we continue to build on this maiden profitability that we've achieved in EnviroStream this last quarter, and build on that. As one of your opening questions, is it sustainable and can we grow it? That's really our focus.
Okay, well, thank you for that one. Well, Simon, before we wrap things up, is there anything you'd like to finish us off with?
Look, it's been great to talk to you. We appreciate our shareholders and their patience and understanding in terms of where we're going with our strategy. It is playing out, and as I said earlier, I think we're showing that we do what we say, and watch this space for further good news from Lithium Australia.
Well, thank you very much, Simon and Lithium Australia, for your time, and thank you very much, ladies and gentlemen. This one has been recorded and will be posted on the Sharewise YouTube for you to rewatch or distribute as required. Any further questions, please submit them through Simon. Thank you very much, ladies and gentlemen. Enjoy the rest of your day. Cheers.
Thanks, everyone.